Good morning and welcome to the Suburban Realtors Alliance Regional Legislative Update. My name is Jamie Ridge and I am President and CEO of the SRA. Also from our staff, we have Pete Kennedy, our Communications Manager, who will be acting as host of the meeting. I want to say a special thank you to our guest presenters this morning who have set this time aside to provide us with the latest legislative news from the National Association of Realtors and the Pennsylvania Association of Realtors. From Washington, D.C., we have NAR Political Representative Drew Myers and Megan Booth, who is NAR's Director of Federal Housing, Valuation, Commercial Real Estate Policy, and Programs. And broadcasting from Delaware County this morning, we have our good friend, Alex Charlton, who is PAR's Director of Public Policy, our Chief Lobbyist in Harrisburg. Thanks to each of you for being with us. There are so many issues that are being debated in both Harrisburg and Washington, D.C. right now that will have an impact on our industry over the long term and even over the next few weeks. That's why we're so grateful to have Drew, Megan, and Alex with us this morning. We are all looking forward to the updates, and for that reason, I want to dive right into their presentations. Alex, you have the stage.
Pennsylvania, Vermont, and Washington, D.C. are the only three states that have pretty much completely shut down real estate transactions. Every other state has allowed them in limited capacities, recognizing the need for shelter being one of the essentials. So it has given us a bit of an uphill challenge. We have been trying to work with the governor's office on solutions, ways for our members to be able to work and to operate. Not having, unfortunately, a lot of success down that route. We had initially proposed that the governor just follow standard CISA guidelines, allowing businesses that follow or that fall into those categories being allowed to operate. There was a piece of legislation. It was Senate Bill 613 that would have required the governor to follow those guidelines. Unfortunately, it became a partisan debate. The bill passed both the House and the Senate, pretty much straight down party lines. And when it made its way to the governor, within about 3 days, he vetoed the bill. It was not the outcome that we had wanted, obviously, but not necessarily unexpected. He had indicated that his sole focus is focused on the health and safety of the citizens of Pennsylvania. Our understanding is that he and Dr. Levine are pretty much the two in charge. There's not a lot of input coming from other agencies or departments in what businesses should be operating. So it's added to the challenge for us. Since 613 was vetoed, one of our good friends, and I'm sure many of you know him, Representative Todd Polinchak, put out a piece of legislation, which is House Bill 2412. This bill is focused strictly on real estate and would provide an opportunity for real estate to be considered essential and would allow our members to operate within certain boundaries. It would not be business as usual. Things like open houses would not be permitted, but it would allow real estate transactions to be conducted. It would allow those ancillary industries around us that need to be available to close a deal would be accessible. Because this bill is narrow in scope and it does strictly focus on real estate and its related industries, we have seen a larger amount of support for this bill in the House. Representative Polinchak has quite a few co-sponsors on his bill, and almost about 40% of them are from the Democrat caucus, which is great. It shows a strong bipartisan support for the bill. Since he introduced that last week, it has moved out of committee and is teed up for Monday to start the floor voting process, which requires 2 days. We are probably going to do a call to action on that bill. The only thing that we're holding off on is Representative Polinchak does have a meeting later today with the governor's office. to discuss his bill and real estate's impact on the economy and everything surrounding the issue for the emergency declaration. So there is an opportunity there that we will be able to get some concessions out of the governor's office through that meeting that might make House Bill 2412 unnecessary. So keep your fingers crossed. We're waiting to hear the outcome of that meeting. You will know the outcome of that meeting because one of two things will happen. Either you'll see a call to action, which means the meeting didn't go well, or we will be sending out information to our membership that we have a tentative agreement with the governor's office to reopen real estate. So stay tuned for it. Obviously, if the meeting doesn't go the way we hope it will, we do have the bill ready to go and to run it. We also have Senator Boscola. She has introduced companion legislation to Todd's bill in the Senate. She put out the memo. She's not dropped the actual bill yet. She's going to do that later today, again, pending the outcome of the meeting. But again, that bill, significant amount of bipartisan support. Senator Boscola is a Democrat herself. One of our Republican senators, Kristen Phillips Hill, is her co-prime on the bill. So again, showing really strong bipartisan support. If either one of these bills does need to move, we do anticipate that we would have a large amount of Republican and Democrat support on the bills, which is great for us. Frankly, it puts the governor in a very hard position to veto the bill when it makes it to his desk. And if he does, opening up the opportunity for a veto override. So we'll obviously be tracking these very closely. For many people, it's Friday. For me, it's might as well be Monday because I'm sure this weekend's going to be busy. But so we're very excited for that. We are waiting to hear the results of Todd's meeting today. So stay tuned. Obviously, we'll be giving everyone as much information as possible on that. Outside of the legislative sphere, obviously a lot of our members asking questions about the unemployment compensation issue. It's been confusing for a number of people. Obviously, real estate industry has never really dealt with unemployment and typically weren't available to have access to it until now. So handling it is through the Department of Labor and Industry, and they also not used to self-employed applying for this, so it was a bit of a learning curve for them as well. They do have the online platform up and running. Hopefully everyone was able to join us on Facebook Live yesterday with Bill Festa, and we had a unemployment compensation lawyer speaking on the issue to help provide some information and background on it. If you go to PAR's website, you should be able to watch that video again if you missed it. So it addresses a lot of the questions that are out there. What do you do if your primary source of income is real estate, but you also have a side job that is salaried or hourly? It answers those questions. So take a look at that. Obviously, I am not an expert in that field, so I wouldn't want to try to answer those questions. If you see something in there that doesn't answer, or if you don't see anything in there that answers your questions, you can call PAR's legal hotline. They'll try to guide you as well. But the state also does have a hotline and an email address for unemployment compensation. They are a good resource. I will caution they are not quick to return those calls, so you do need some patience. And we do not encourage you to call and email because it only slows down the system. Whichever avenue you use, phone or email, just know that they will respond to you. Unfortunately, it's taking multiple days, though, for them to get back. I think it's like 1.5 million people are applying for it right now. So it's obviously a system that is completely overwhelmed. It was not designed for this kind of critical mass. But the unemployment is out there. You are available to access it. I will say that there's been a lot of confusion on whether the industry is deemed to be essential or not and how that impacts your unemployment. The basic answer is those are two separate things. There are plenty of people who are in essential categories who are collecting unemployment because they simply can't work. So the designation of your industry doesn't have any impact on your ability to collect. There are a million other reasons why you may need to collect on that. So, but use this as a resource as much as you need to, and use the Department of Labor and Industry as well. They do have good information on their website. And again, you can email them with questions. Just understand that the response rate's a little bit slow on their part. The only other item that I have that I'm happy to take questions or however we want to handle it is you will see that the governor did release the other day his plan for restarting Pennsylvania. He is essentially using a color-coded system, red, yellow, green. Red is essentially the entire state right now is red. You are under a lockdown. Well, I shouldn't say a lockdown, but you're in a shelter in place. They don't want you really going anywhere, only non-essential business and travel, things like that. The next step is a regional approach, moving certain regions into the yellow phase. And I'm going to try and do a share content here. So cross your fingers that this works. Okay. So I'm going to try and talk and type at the same time. So no, I'm not. One second here, sorry. One of the items that we do have is, as it goes into yellow, like I said, it's going to be done in a regional process. It is not going to be county by county. So the state he has split up into 3 regions. Hold on one second here. He's essentially split up the state into 3 regions, and all right, so that's not going to work. Hold on, I'm going to try something else while I talk here. So the regions that he has set up are loosely based on north, south, east, west, central areas. I'm going to try and bring up the website here. Maybe that will work better for us. I apologize for the slowdown with doing it this way.
Alex, if it's the governor's website, would you like me to try and bring it up on my end?
Well, it is, but there's a specific page that he has fortunately buried. So here we go. Okay. So here's his process to reopen Pennsylvania. It's a pretty lengthy document, but it is worth a read. So the entire state is in the red phase right now, life-sustaining business only, trying to keep restrictions in place, no school, childcare facilities closed, blah, blah, blah. Next step is moving certain regions into the yellow phase. And the yellow phase still has a number of restrictions in place. If a industry is able to telework, it needs to continue down that path. Anything with in-person operations has to follow safety orders. They are going to be opening up some child care centers and things like that for people who do need to go back to work and have children. Schools remain closed. We do have clarification from the governor's office that real estate is a yellow phase industry. So we do know that at a minimum, once a region goes yellow, real estate is able to operate and get back to work. We are pushing for a statewide opening of real estate because we think it would be, it's a better process for our industry. That final phase is the green phase. Essentially, you're opening everything back up, but you have to follow CDC guidelines and whatever Department of Health puts out there as well. But the important part is, here you go. These are the regions that will be opening. So, and it's based on number of known cases in the regions. Northwest and North Central have been by far the least affected by the coronavirus. So those are the two that are likely to be opening within the first week. I believe it's the 8th is when he will start opening regions. Those two will probably be opening on the first day. Unfortunately for us, the Southeast has been impacted the hardest. And it's likely that the Southeast is going to be the last area to be opening. We don't have timelines for when those are going to happen. He is taking a very data-driven approach to it, where once the virus seems to be well contained, only at that point will he begin to open up a new region. So just because Northwest and North Central open on the 8th doesn't mean the following week he's going to open Southwest and move down the line. We just don't know what it's going to look like. Although we can predict that Northeast and Southeast are probably two of the last places to be opening up. Obviously, as it relates to real estate, the biggest challenge here is, if you are a realtor in Lancaster, but you have a client in York, what does that mean? If South Central is open and Southeast is not, are you allowed to conduct business? Or if you are a real estate agent, a realtor in York, and you have a client in Lancaster, what does that mean? So we're trying to get those clarifications from the governor's office. And this is why we're trying to push for a statewide reopening. I'm going to scroll through here, and I don't think there's anything else that's really important for right now. No. Okay. So that link is out there. It gives you a good visual on what the plan is. Obviously, we don't think a regional approach to reopening makes a lot of sense. We would prefer to see that done in a statewide manner. The reality is anyone who is looking to buy or sell their property right now, it's not because they're just casually looking to find a new home. These are people with a real need to have to sell their property or to buy a new one. And certainly stalling, especially down in the Southeast where you've got a significant amount of the population, making them wait for an arbitrary date is not going to be beneficial for us. So again, we're hopeful that the governor will relent and give us the ability to open statewide, but we'll know better probably later today. So fingers crossed, everybody, and we'll let you know later this afternoon what the outcome of the meeting looks like. That's pretty much all I have. So Jamie, Pete, I'm happy to take questions, or if you want to hold those until later.
I think we'll do questions for you right now.
Okay.
The one that we got the most of before this began was when might we realistically go back to work with precautions, but I think you've kind of just answered that as best you can right now. We have the question, is there any legislation specifically targeting local municipalities, a minimum set of services that they need to provide, like courthouse and inspections? Just wondering if there's anything being discussed that might help us with situations where the municipalities close, but they're still requiring use and occupancy permits.
Yeah, and that's an issue that's been popping up, obviously the Southeast in particular, but across the state. You have county courthouses are closed and you can't record a deed. You've got municipalities closed, but they still want to see a UNO. So part of Todd's legislation, House Bill 2412, will address that because we're going to put an amendment in there to make sure that there's some clarifications to it. But part of Todd's bill is not just to allow real estate to practice, but it is requiring that it also has the ability for a settlement to come to close. So that would require courthouses to be able to accept deeds. It would require, if there's a municipality that has UNOs, to be able to conduct those UNOs. Because obviously, if we open up real estate, but we don't open up the local governments, it still puts you in the same position. You're not going to see many people who are comfortable with, selling their property or buying a property, but they can't record their deed, and they don't, in the eyes of the government, they still don't own it yet. So we're working on those problems, and those will be addressed through 2412 if the governor doesn't reopen statewide.
Okay. Another question, I'm not sure how much you can speak to this, but we had a couple along the lines of, why doesn't the state enforce the governor's stay-at-home order? especially compared to neighboring states, and how do we get them to do so? Another version of that came in. Can you please clarify that there should be no photography and no showings, regardless of the home being vacant? All I want is a level playing field. So it sounds like there's some frustration with, some people breaking the rules.
So PAR's interpretation of the governor's order is to put it as simply as possible. If you can't do something from the comfort of your couch in your underwear, you can't do it. It really is that simple. It's heavy-handed, and it's not the approach that we would want. And we're working to try and correct that. But that is essentially where we are right now. It doesn't matter if a home is vacant. You are not allowed to go into it. Essentially, you can't do anything in person. And you being a person, if you go somewhere, you are in person. A virtual tour, you can't go to a property to give a client a virtual tour because you are going in person to do that. If there is a currently inhabited property and the owner of the property videos a walk around of it, they can send that to you because they are doing it from their home, and then you are sending it to your client from your home. So you're really not supposed to be going out of your house, whether it's to take photography, whether it's to put a sign up. They do not want you out there. They don't want you leaving your home unless you have to do something that is essential. So essential is getting food, going out and getting medicine or visiting a doctor or something like that. Unfortunately, applying the trade is not essential right now. So anything related to that outside of the home is not okay. In regards to how to report it or why the state isn't doing much on that, the governor has given the state police and any local or regional police authorities the ability to enforce the ruling. They're focused on probably bigger issues, and the reality is, unless somebody, especially in the real estate industry, if you see that there is someone who is doing a home showing and you alert the state police, well, the state police will probably send the vehicle as soon as they can. Unfortunately, the showing may be done by then, and there's nobody there. If they do catch somebody in the act, generally they're only getting a warning. Why they're not putting up fines, I don't know. And actually, the reality that we're even seeing on Facebook, which we don't condone, is for some people they are looking at the fine as a cost of doing business. It's a relatively low fine, and they're willing to take that risk. Again, we don't encourage that. That's a very unsafe practice, and it can have issues for you down the line. The governor did just open up a COVID-19 complaint form. So this is an opportunity. It's a web form that people can fill out that essentially, if they see a business or an individual who is doing something that is not permitted under the COVID-19 emergency declaration, you can provide this information and it will be sent to the appropriate authorities to take action on. So the form is out there. I'd bring it up, but given how long it took me to bring up the last one, it's too many letters and words in the form. But I can email it to Pete, and Pete can share it with everyone at the end of this.
Okay. It sounds like somebody asked if the stay-at-home order applies to a commercial in the same way that it applies to other agents and brokers. And it sounds like the answer to that is yes.
Yes, it does.
Okay.
One more question for Alex, Pete, and then we'll turn it over to Drew and Megan, and then we'll follow up after those.
Okay, here's a one about SB 841. Does it require all municipalities to accept remote notarization? Originally, it was only about 11 counties who would accept them.
So 841 gives the ability for remote online notarization. It does not require anybody to accept remote online notarization. So if you have a mortgage lender or a county recorder of deeds or a municipal office that requires a wet signature, so paper to ink directly to paper, they are not required to accept remote online notarizations. It just allows them the opportunity to, if they so choose. There is legislation that probably won't be addressed until after the COVID-19 issue starts to move away. That would be a long-term solution to allow for remote online notarizations and requiring governments to accept them. But that bill's probably not going to move until some more urgent bills move through the process. So it gives you the ability to do it, but it doesn't require anyone to accept it.
Okay. And just to note that I did just post a link to that complaint form in the chat.
Okay. All right, Drew, you've got the floor.
Well, thank you, Jamie. Good morning, everyone. It's a pleasure to be here with you all, even through video conference. I certainly look forward to the time where we can all be in person again, and hope that that's not in the too distant future at this point. But I want to start just briefly by giving a bit of an introduction, highlighting a couple of resources, and then I'm going to kick it to my colleague, Megan Booth, who Jamie introduced earlier. Thrilled to have her here this morning to go into some of the details of the CARES Act and possibly some future legislation that we're looking at. But first and foremost, I just want you to know, similar to what Alex mentioned, I think we all at this point are working pretty much around the clock with policymakers, with coalitions, and others in our industry to ensure that the interests of realtors are protected in any federal action or response to COVID-19. And that's gone back now for several weeks from some of the early phases of legislation that you saw through this phase 3 legislation, the CARES Act that passed just a couple of weeks ago. And we'll continue through legislation that passed the Senate the other day and future phases that we'll see, I think, in the coming weeks. As part of that, we are in constant communication with our industry partners and others here in DC to ensure that we are united really in defending the real estate industry and that we are kind of meeting this challenge head on and where we can, certainly working together and is an efficient way as possible to minimize transaction disruptions in the real estate industry during this time. So I want to quickly highlight a couple of resources. We've got a ton of information on our website, anything and everything coronavirus related. So of course there's the advocacy piece, summaries of legislation and talking points on different things that have come out. But you know, we do more than just advocacy in the realtor world. And so if you've got questions on how you can function during this time, how you run your business, how you deal with clients, so on and so forth, check out nar.realtor/coronavirus. A ton of resources there for you. In addition to that, if you are looking for regular updates, you can text COVID-19, just COVID-19 to 30644. And that will loop you into our system so that you get regular text updates of as big things hit. In addition to that, and kind of on, you know, moving away from the advocacy piece, as I mentioned, NAR has activated a program that was first initiated back in 2008 called Right Tools Right Now. So this program came about during the 2008 crisis. And it makes new and existing NAR products and services available for free or at a significant discount to members, and in some cases to your family as well. So again, there is a direct link to that page that gives more information on Right Tools Right Now directly from our homepage, which is just nar.realtor. I want to highlight one feature of that we're really pushing right now because we're finding that it is really timely for a lot of our members, and that's the telehealth service. So NAR is now offering free telehealth services to members and their families for 2 months. If you go online and you sign up, I think the deadline to sign up is May 31st. So as long as you put in your application and sign up before May 31st, you get a free 2 months of telehealth services for you and your family. And then from that point forward, if needed in the future, you get it at a significantly discounted rate. So definitely, given the time that we're in right now, and certainly the guidance to stay indoors, certainly not visit the healthcare system unless it's an emergency, telehealth services are becoming a great option for many people. So I encourage you to look at that. And then lastly, NAR has repurposed our hotline. We've had a legal hotline in place, of course, for a long time. We have repurposed that at this point to take questions on anything and everything coronavirus related. So that number is 1-800-874-6500, 1-800-874-6500. If at any point you have questions and you're not sure who to contact about the question, or you can't get in touch with someone during regular business hours, you call that number. You'll speak directly with a member of our team, and they will either be able to answer the question for you or certainly point you in the right direction. So with that, again, I encourage you to take advantage of those resources. Check out the webpage. Look specifically, I should have mentioned this earlier, when you go to that NAR.realtor/coronavirus, look specifically for the FAQs that we've developed for advocacy. So there are 3 or 4 different FAQs there now on a variety of topics that will give you some really good guidance, I think, for any questions that you may have. With that, I want to kick it over to my colleague, Megan Booth, to go into some detail on the CARES Act. Megan?
Hello, everybody. Thank you for having me join you today. I'm going to share my screen here. All right. Let's go. Begin. Okay. So I'm going to talk to you a little bit of overview of what we've been doing for members during this time. These are 2 great places to start: our coronavirus FAQ on our website, and there's a summary of the CARES Act. And I just put this in the chat, the text number for our website. So hopefully you all know that you should be getting a check, if you haven't already, from the federal government. These checks are have been started being sent out to anyone who is making less than $75,000 or 150 filing jointly. If you make just a little bit more than that, you will get a check. It'll just be, the amount will be decreased. If you haven't gotten your check, the IRS actually now has a website where you can check the status of your refund check. You can go to that website that's there on the slide. And you can also go on, if you haven't gotten it yet and you want to update your bank account information or anything else, you can also do that through the IRS website. The IRS will not call you to verify your account number. So that is a big scam. There's a lot of scams happening. There's a lot of bad actors out there who are trying to take advantage of people during this challenging time. So if someone calls you and says they're from the IRS and they want to verify your bank account number, that is not true. Do not do that. And you should, if you go to the FTC website, ftc.gov, they have a list of all the current scams they are tracking. You also know that you can take money out of a retirement account if you have an IRA or a 401k or any type of account like that. You can take withdrawal from that without a penalty. You can also, if you want to pay yourself back later, you can also do that. Those were a couple of things added in the tax area. For homeowners, obviously, hopefully you all know that you are eligible to get a 1 year's worth of forbearance without proof of hardship. Something to keep in mind here is forbearance is not forgiveness. You are still required to make your payments on your mortgage. So in order to get this, you, number 1, have to call your lender or servicer. Where do you get their number? It's on your coupon for your mortgage coupon. So any contact who's on that payment stub you get for when you have to make your mortgage payment, you should be able to call them and request this. If you have a Freddie Mac or a Fannie Mae loan, and if you don't know, you can go to their websites and look it up. It's available. The link to that is available on our FAQ. If you have a Freddie or Fannie loan, they are required to work with you so that you do not have a big lump sum payment whenever your forbearance ends. So we actually have scripts that they have been given by Fannie Mae and Freddie Mac, all the servicers, on how they're allowed to sort of walk you through what your options are. And those scripts are also available on our FAQ. So you can see what they're supposed to be saying to you. And if they're not saying that, you should report them to Fannie and Freddie. And how to do that is also on our website. If you are a renter in a property that has an FHA loan or a Freddie or Fannie loan or a USDA loan or any kind of federally touched loan, tax credit, anything, they can request relief from eviction for 120 days. Again, it's relief from eviction. That doesn't mean you don't still owe the rent. So you need to call your landlord and figure out what your repayment plan is going to be. Otherwise, you will owe it all at the end of the 120 days. Many landlords are also eligible for forbearance. About 50% of the multifamily market does have a federally secured loan. If you do, you can request forbearance for up to 90 days. It's done in 30-day increments, and you have to call your servicer to get it. We do recognize there's a disconnect there. Your tenants don't have to pay for 120 days, which actually is closer to 150 days because you have to give 30 days notice. And the landlords only get 90 days. So that doesn't seem right. How are those housing providers going to continue to provide that housing without being able to pay their investors or pay their mortgages? So we are working with Congress. We have several members of Congress that have been circulating a congressional sign-on letter to make sure that the next, the CARES Act 4.0 includes equal relief for landlords as it does for renters. As for the rest of the market, if you are a landlord or housing provider that does not have a federally connected mortgage, we are working with the National Multi-Housing Council, the National Apartment Association, and a number of other groups to try and make sure there's some kind of relief provided to you as well, because we know that many states and localities are requiring you to, or preventing you from evicting someone for failure to pay at this time. Can you still sell homes? So you should absolutely listen to what Alex says about whether or not you can sell homes in Pennsylvania. But when you can sell homes again, if they have all of the restrictions in place that are in place in many parts of the country, we have some resources on our website that show you how to do virtual showings and how to do open houses under COVID. Again, do not do these right now. Apparently you're not able to in Pennsylvania, but when you are able to, we have some great resources there. Okay, the next thing I'm going to talk about is your home buyers. So we've been hearing a lot from across the country for home buyers that are struggling because their lender is changing the rules mid-course. So you have a home buyer that's already qualified for a mortgage, and now the lender is saying, oh, by the way, now you have to have 20% down, or now you have to have 4 months of reserves, or now your credit score had to be over 720. First of all, let me say that the federal loan programs have not changed any of their requirements in this way at this point. So your lender will say to you, oh, Fannie made me do this, or FHA made me do this. That is just a straight out lie. None of them have done that. They are doing it themselves. And you can understand why to a degree, right? If you're a lender and you're going to make a mortgage with someone and you know the following day they can ask for a year's, they tell you they're not going to pay it for a year. That's a lot of risk for them to take on. That's why they're doing it. So we are working with a number of federal agencies to try and provide some confidence to lenders to make these loans. So for example, Freddie and Fannie just came out with some guidance saying they will buy loans that are in forbearance. So if you're a lender and you're planning on selling that loan to Freddie or Fannie, and the borrower the next day asks for the forbearance, Freddie and Fannie will still buy them. I will say we're not happy with the terms they're offering lenders. They're pretty high, and they're charging some high fees. We don't think that's going to be sufficient to move the market, but it's a start. So we're working with FHFA, who governs Freddie and Fannie, on that. HUD has come out and said that, or Ginnie Mae, who securitizes HUD loans, VA loans, and rural housing loans, that they're offering a liquidity facility, which means lenders and servicers who have a HUD, FHA, or rural housing loan that has now gone into forbearance, they can get out a loan, to a low interest rate loan, to pay their investors during that time. So we're hoping that helps in the FHA space. I will tell you that the FHA Commissioner, Brian Montgomery, yesterday made some remarks that FHA may increase premiums. We are not happy about that at all. And when I hang up from this call, I'm going to be working on a letter to him saying, no, don't do that. So we are definitely aware of the problems that people are having with loan servicers and with getting loans closed, and we are absolutely trying to work on that. These are just a couple other things. Verification of employment has been challenging, but all of the federal touched mortgage programs are allowing oral or email verification, but each lender might be doing something different. Same as appraisals. Appraisals are allowed to be done externally, or you can even do them desktop with MLS data. A lot of lenders aren't necessarily allowing that, but that's what the federal requirements are. And I know that Alex already touched on e-closings. Okay, so I'm going to talk about some of the other relief that is available. I'm going to start with pandemic unemployment benefits. And I'm going to defer a little bit to Alex on this because it really depends on your state. I will tell you what the federal guidelines say. So as Alex mentioned, self-employed people have generally been ineligible for unemployment. So state unemployment offices were really hit with this out of the blue, didn't have a way to accept applications from self-employed people. In fact, their little, when you went in to apply, one of the first things it says is, are you self-employed? You'd say yes, and say you're ineligible. The federal program makes everybody ineligible, but some states are taking a little bit longer to sort of get up to speed on that because it's completely new. So keep trying. States are getting more and more. They've gotten a lot of guidance from Department of Labor now. Most of them are now getting up to speed. The guidance under the government's program says that you can receive up to 39 weeks of assistance, and there's 8 weeks of additional up to $600 a week. And that's on top of whatever your state unemployment is. That's directly from the feds. Again, some states are taking a little bit longer. You should keep trying. We do know there are realtors across the country who are currently getting unemployment. Now I'm going to talk about the SBA loans. So first, let me say, if you think that you want to get one of these small business loans, you should hang up right now and walk, not run, to apply, because we finally got more funding last night. The president signed a bill to provide additional funding for both of these loan programs. We think it will run out quickly. We're going to have to keep doing this again and again, refunding these programs. But if you are interested in one of these loans, we have a lot of great resources. So stay on for like 3 more minutes and then hang up and go apply for one of these loans. So the first one is the EIDL loan. So what an EIDL loan, it's an economic injury disaster loan program. I will first start off by telling you independent contractors are eligible for both of these loan programs I'm going to talk about. A lot of people are saying, oh, my lender says I'm not. That is not true. Independent contractors, sole proprietors, small businesses, all of them eligible for both of the loans I'm going to tell you about. So the EIDL runs a little bit more smoothly than the second one I'm going to tell you about. The EIDL runs more smoothly because it's taken out directly with the Small Business Administration. You apply on the SBA's website. You do not need to find a lender willing to take your application. You don't have to have an existing business relationship. You can get it directly through the SBA. It's also an existing program, so it's not as challenging as the PPP, which was a brand new program. So the benefits of EIDL loans is you can get an advance up to $1,000 per employee, up to $10,000. And an employee, if it's just you, that includes yourself. So you get a $1,000 advance if you're just applying for yourself. But the loans are include payroll, which is what you pay yourself, fixed debts, any other accounts payable, and any other expenses that you are unable to pay because of the pandemic. These loans have a very low interest rate, 3.75%, and there are no payments and no interest for the first 12 months. So this program is super easy to apply through. It's directly through the SBA's website. And if you go to our website, we have links on how to do that. There you go. That's their website and their customer service line. So that's a loan program that you can apply to right through SBA. You don't have to find a lender. This one is the more popular one, the PPP, the Payroll Protection Plan. This is a brand new program created a month ago. And so there's still some issues with it. People are still getting up to speed, and it already ran out of money once. Like I said, we just got it refunded last night. So yes, you are eligible to apply for a PPP loan. Again, the payroll you are protecting is your pay. So they're based on a formula. There's a lot more information about this on our website, but they're based on a formula that you use to calculate what your pay would be. And these are a fixed interest rate at 1%. There are no payments for the first 6 months. And I know a number of realtors who have gotten this type of loan. So I encourage you to look into this type of loan if you need some help during this time. I will also tell you that we have a video that was just uploaded to our website yesterday with 3 different realtors, all with different sort of structures. One who's just a plain old independent contractor, one who's a schedule is an S Corp, and one who's a large broker. All three of them have successfully gotten PPP loans, and we have interviews with them on our website. If you go to the main splash screen at nar.realtor, it's the big picture you're going to see. I think I have I can show you what it looks like. It looks like that. Those are the videos with the people. The person in the bottom right, Erin Stackley, that's my colleague who is our SBA specialist. The other 4 people on the screen are all realtors. Lori is an independent contractor. Maura is an S Corp, and Charlie Opler, who's the 2021 president of NAR, is a large broker. And then Nathan Hughes in the bottom left, he is a commercial developer, and he got an EIDL loan. So we have a video with interviews of all of them about how they did it, what documents they had to provide. So I encourage you to go check those out. Big question we get, can I get an EIDL and a PPP? You can. You can also you could get unemployment, a PPP, and an EIDL. You can get all 3. However, they cannot all be be used for the same thing. So you can't get unemployment to pay yourself, apply for a PPP to pay yourself, and apply for an EIDL to pay yourself. You can't double dip on any of them or triple dip. So you can only, everything has to, if you can theoretically get all 3, but they have to be used for different things. So you could get unemployment to pay for yourself. If you have an assistant, you could get a PPP to pay your assistant. If you have like a mortgage payment on an office building or something like that, you could get an EIDL to pay for that. So you can get all the different types of loans. You just cannot double dip and use them for the same thing. We have this great infographic on our website that compares the 2 programs. As I said, the biggest part of both the loans have parts that can be forgivable. The PPP is more popular, has a bigger amount that's forgivable. The EIDL is a little easier to apply for because you don't have to find a lender who's willing to work with you on it. It goes right through SBA. So those are your options. Go to this website, lots of information on there, gives you the actual documents you need, what you have to provide. My colleague, Erin, who I showed you her picture of right here, she will tell you that the biggest thing to keep in line with the PPP is be patient, be prepared, and be persistent. So have your information ready. Generally, if you're an independent contractor, you need your Form 1040 Schedule C and your 1099 MISC. And they have to be from the tax year 2019. You cannot use your 2018. So even though your taxes are delayed until July 15th, you still have to have that document completed. It does not have to be filed. It does have to be completed in order to apply for these loans. So get on that if you haven't done it already. All right, real quickly, I just want to end with some information for our commercial members. Commercial realtors are also struggling during this. They have tenants who are not paying. Let me talk about quickly the first 2 for the 1031 like-kind exchange program and the Qualified Opportunity Funds program. We lobbied hard the IRS to extend the deadlines, for example, the 45-day identification of a new property for the 1031, and also for investing in a qualified opportunity zone. All of those have also been extended to July 15th, along with your regular tax filings. If you're a property manager, IRM has opened up a lot of their resources on their website for free. Stuff that would usually be only available to members, they are offering for free. They have a great pandemic guide. They have a whole bunch of really short, like 15 to 20-minute videos on how to talk to your tenants, how to collect rent during this period, what are some suggestions on how to work out rent repayments if you're, for example, in a shopping center or something like that. Some great information. There's also a couple tax provisions that were included in the CARES Act that I want to touch on very briefly. The first one is it allows, this one allows businesses immediately to write off the cost of internal improvements to real estate. So if you're a commercial realtor and you made improvements in your retail shopping center for a new tenant, you could, instead of having to depreciate those over 39 years, you can depreciate them immediately. And you can even file an amended tax return for 2018 if you want to collect that revenue right now. There's also a provision to allow businesses to offset tax losses. So you can carry back net operating losses from 2018, 2019, and 2020 against profitable years for up to 5 years. So again, if you wanted to file an amended return for 2018 to get some cash back immediately, you could do that under that provision. And there's more information on our website about that. Lastly, what's next? Phase 4. So phase 3.2 was yesterday when we got additional funding for the SBA programs. That's going to have to continue. So that will be something in phase 4. We will again be asking for more money for those programs. We're trying to get remote notary authorized across the country. I think there's 22 states that allow it now, but we're trying to get it for everywhere immediately. We think that a lot of people don't understand how the forbearance works, and so we're worried people will go into foreclosure at the end of that time because they can't make their payments. So we're asking for increased funding for housing counseling. I mentioned that we're looking for relief for landlords so that they get the same sort of forbearance that their renters get from paying their rent. I mentioned continuing funding for SBA and 501c6s. 501c6s are currently not eligible for the PPP or EIDL loan. 501c6s are how most of your realtor associations are structured. We have been working with a big coalition to get them eligible. So with that and more are what we're looking for in the next phase. And we'll be working with Congress on all of these things. We are in constant communication, but I encourage you to go to our website, check out our FAQs. We have lots of really great resources on there.
Okay. Thank you so much, Megan and Drew. And I would ask at this point, Pete, if we have any follow-up questions that could be addressed by Megan and Drew.
We do, and I'll remind folks that they should be able to see the answered questions already. I know that Megan was in there and Alex was in there answering some questions that have been posted already. A couple of people asked if I have an assistant that's paid by a 1099, can I receive funding through one of these SBA programs for them?
So if they are an independent contractor, they should just apply on their own.
Okay. Okay. A couple of people have also asked if I already applied, say back in the first week of April and haven't heard anything, do I need to reapply?
That is a great question. So for both the EIDL and the PPP, if you have already applied, if you've applied with an EIDL, if you go to our website under the SBA FAQs, I think there is a link to how you can track the status of your EIDL. So if you have already applied, you're probably fine. The SBA, basically, the second they ran out of money, they stopped processing, but that doesn't mean they don't still have your loan application. So there is a way on the SBA website, or just if you Google how to check the status of my EIDL, you'll find the link. You can go on there. If you put in your social security number and a couple other pieces of information, you can check the status of your EIDL. Make sure you're on the social security, make sure you're on the SBA website before you put in your social security number. With the PPP, you want to check back in with your lender. Most of the lenders took your application or kind of holding it until the funding was reauthorized, which, as I said, the president signed yesterday. So they should start processing them again. I would do a gentle touch with your lender. You definitely want to stay in contact with your lender, but you don't want to harass them. So stay in contact with them and just be like, hey, just check it to see if you need any more information from me, if anything I can do to help you with my loan, that kind of thing. Oh, I just saw a question. Does a loan become a grant and is it forgiven? Yes, if you continue to pay under the PPP, if you continue to pay your payroll at, I think it's, I'm going to forget, it's on our thing. It's 75%. I think it's 75% of your payroll before COVID. If you are still paying 75% of your payroll after COVID, it can be, it becomes a grant and it's forgivable. So again, you count as your payroll. So as long as you keep paying yourself, which why wouldn't you, you can get that loan forgiven. So yes, and the EIDL, the cash advance can be forgiven.
Okay, and I think probably the last question for you, I believe you touched on this a little bit with what Fannie and Freddie are doing to give some relief to the loan servicers, but one person asked, is there any legislation that specifically targets loan servicers? They're being squeezed as folks take the forbearance on their mortgage, but they still need to pay their investors. It's creating a situation where the servicers are pulling back on risk, which makes it harder for people to get mortgages.
Absolutely. That's a real problem we're seeing. And honestly, I think it's going to get a little bit worse before it gets a little bit better. But I haven't seen legislation to do that yet, but the agencies can do it themselves. So Treasury could do it. And we sent a letter asking Treasury to do something about it. So Treasury could set up a liquidity facility where they could allow those servicers to take out very low interest rate, short-term loans to help them pay their investors. Same thing with Freddie and Fannie. FHFA could do it. And as I said, Ginnie Mae has already announced that. I think it's supposed to go into effect on Monday for FHA, VA, and rural housing loans. So the agencies can do it themselves. I haven't seen any legislation to do it yet, but it can be done administratively without legislation. So that's the avenue we are pushing hard. And we've been working with the NBA and the ABA and other groups to make sure this happens, because that's exactly right. If they cannot get any kind of relief to pay their investors, they're going to have to stop lending because they'll just run out of money.
Okay, I'm seeing one follow-up, well, not a follow-up question, but a question about SB 841, Alex, for you. Does SB 841 require all municipalities to accept remote notarization? Originally, it was only about 11 counties who would accept them.
No, so it allows the use of remote online notarizations. It does not require the acceptance of remote online notarizations. So you would want to clarify that with anybody who's going to be receiving a document before you do a remote online notarization, just to make sure that they will accept it.
The one county that we've been in pretty close contact with our recorders of deeds in our area, and the one county that we know is not accepting at this point is Delaware County. The other 3 counties say that they are accepting them. So if that's not true, then please let us know, and we'll be back in touch with them to make sure that that can be done, at least at the county level. All right, Pete, do you have any other follow-ups?
No, I don't think so. But so long as we have Alex right there, Alex, a few people in the chat just wanted a reminder on what the meeting is today. Who is meeting you that you referenced a couple of times?
Representative Palanchuk will be meeting with senior staff at the governor's office.
Okay. I think that's all, Jamie.
Okay. I just want to close out with just a little update about what's going on with the SRA. As many of you have already heard, one of the first things that we did was we reached out to all of our 238 municipalities to see what their plan was in terms of whether or not they had a UNO, and if so, how they would be changing that during this time. Because as we know, with no inspections allowed, those municipalities would not be issuing UNOs. So we've seen some hope. There have been a good number of municipalities that have amended their process for this time. They range from anything from a very simple affidavit program form that allows you to say, yes, I've got smoke detectors, I've got CO detectors, I've got numbers on the mailbox, sign the affidavit, and you've got your UNO. That's the simple form, and we've been sharing that as often as we can. We do have other versions. One is I would call it the self-inspection version, which is better than nothing. And that we've seen that in Havertown, for example. That gives you a list of the things that they inspect most often, the things that they're really looking for when they go into a home. And it allows the seller to check those boxes off to say, yes, we do have these things and they are in place and safe. Now, the downside is that the township will be coming in after settlement at some point to do that inspection. And so there should be probably some agreement between the seller and the buyer regarding who's going to pay for those things if they are requiring those code issues to be fixed. We've seen escrow used also in that case, where the seller will put down escrow to make sure that the buyer has the funds necessary to make those corrections after the fact. The last thing that we've heard is that municipalities are just not open at all, and they're not working, and that's been very difficult. We have one very large municipality who has kind of taken that stance from the beginning, and actually we're meeting with them today to talk to them about some of the different forms that they can use, some of the ideas that they're out there to keep things moving in their municipality. I will say that in the very beginning, we looked at all of these settlements that were on the books in our 4 counties. There were 2,900 settlements in our 4 counties during that time, $1 billion worth of listings. So that is a lot of real estate. Those were a lot of settlements, and I can imagine that a lot of them did not make it to the settlement table. But we are hopeful that with the governor's announcement that we'll be seeing those moving forward. I want you to know that if you have an issue with a municipality, please contact us. The best way to get in touch with us is at SRA@suburbanrealtorsalliance.com. And if it's a use and occupancy issue, we will do our best to get you an answer and to help if we possibly can. So that's what we do for you. The last thing I'll say is, again, thank you to our presenters this morning, Alex and Drew and Megan. We just are so grateful for the time that you spent with us. I will say to the audience that this is a great example of the strength of the Realtor family. You are very, very well represented at all levels of government, the federal government, the state government, and even local municipalities. I don't know of any industry that's better represented than we are as Realtors. So we are fighting hard for you in Harrisburg, in DC, in our counties, and we want you to know that and to let you know that you can reach out to us, and we will do our best to get answers back to you as quickly as we can. With that, Pete, unless we have any other hanging questions that look like we should be dealing with.
No, I don't think so. Just a few people have asked if there will be recording available, and we will make a recording of this presentation available after the fact.
Yeah, we'll post that on Facebook, and we'll also send them out in our news briefs next week. We are going to be holding more of these forums moving forward at all different levels. So just be on the lookout for those, and we'll look forward to it. Again, thanks for being with us this morning. Thanks for your time, and good luck, and stay safe out there. Thank you.
Take care. Thank you.